Hi everybody, welcome back to another in our series of revision videos focusing on essay technique at A-level, in particular the 25 mark questions. This one is going to be looking at macroeconomics and a topical question about trade and protectionism. Here's the question. President Trump has proposed a 20% tariff on Mexican imports, blaming free trade for US woes. To what extent is this going to harm the US economy more than it helps? So as part of the answer, we're going to be looking at how you build what's called our peak and pie approach, building three key analysis points, three key arguments, analysing in the context of the US economy this time and the Mexican economy, and then evaluating the point in turn to build strong evaluation before coming to a final reasoned conclusion or a final reasoned comment. Every question has key topic hooks, so this question is clearly about trade, comparative advantage, protectionism, overall competitiveness, and the wider aspects of the woes the US economy faces, the economic and social welfare aspects of trade policy. Lots of opportunities for diagrams. We'll look at a tariff diagram in a second or two. Contextual awareness in terms of the United States' position in the world economy. Is it moving inwards, looking more towards a sort of protectionist approach, reforming NAFTA, dropping out of TPP? Wider questions about inequality and growth and what drives competitiveness. Keep in mind, of course, that every question has key evaluation hooks. These are the hooks to which if you go back, particularly the final part of the answer, but spasmodically throughout the question, if you go back to these hooks, you're keeping the examiner on side. You're aware of the particular steers they want. So some of the hooks, to what extent, you'll have to calibrate that. Blaming free trade and harm more than it helps. Clearly a sort of evaluative approach in terms of cost and benefit. Okay, let's make a start. I think anchoring the answer is really important, and a good diagram should be right at the heart of the answer. I would put it in pretty much after you've introduced the topic. A diagram should be at least a half of A4. Really clear diagram, well labelled, fully labelled, axes labelled, drawn to the axes. This diagram shows an import tariff on Mexican goods. The initial Mexican price is shown at the bottom there. Then you add a tariff, which increases the price of Mexican cars, and you're going to be building in lots of points about quantities and price as a result of the tariff of Mexican cars. But I think a good half-a-side diagram and tariffs will make a difference, and we have a separate topic video on YouTube on import tariffs if you want to revise that topic. So we're going to build 3 points. We're going to make 3 key points. We're then going to build some contextualized analysis and then evaluate including that point. Really important, exceptionally important. Try to evaluate the point or the argument that you've made rather than necessarily throwing in a kind of generic and general evaluation point. So let's have a look at three examples. It's not the perfect answer, but I think a decent stab at the question. First point I want to make is that import tariffs such as the 20% tax on Mexico, going back to the question, aim to protect domestic industries in the United States and reduce their trade deficit, hinting at one of the economic woes in the question. Then build the analysis, okay? Chains of reasoning, contextualized analysis. High tariffs on imports from Mexico will increase the price of imported products and therefore encourage consumers and firms in the United States perhaps to purchase more domestically produced cars, beer, computer components, whatever. 20% import tariff will cause expenditure switching effects. As a of explanation, the relative price of US output will fall, and this could cause an expansion of output and jobs in the USA because their producers will become more price competitive. This will help the United States by increasing real GDP and helping to close their large trade deficit. So notice in here we're putting a bit of context in, cars and beer and computers. We're recognising the United States has a big trade deficit, and we're putting in some theoretical terms like expenditure switching, relative prices, profitability, etc., as a way of building the analysis. Now that will be supported by the previous tariff diagram. But then we're looking to evaluate, and we're looking to evaluate throughout the answer. However, is an easy way to start the paragraph, 40% of the parts in the typical Mexican product actually originate in the United States. Component parts cross borders many times. So therefore US component suppliers may be harmed if a tariff is applied on Mexico. It will be ineffective in cutting the trade deficit because US exporters will be hurt too. Exports from the United States nearly always contain imports from other countries. including from Mexico. So here's one example of making the point, briefly, clearly, building contextualized analysis, and then adding in some evaluation of the point you've made. And right at the bottom right there, I'm going back to the hurt or the harm aspect of the question. Let's go again. We're looking to build 3 key points. A second way in which an import tariff would help the United States is through the effect on the flows of foreign direct investment. So I'm bringing an FDI point in. Import tariffs may discourage US car manufacturers from Ford and General Motors from moving production of vehicles to Mexico. And this will help, chain of reasoning, to keep more car jobs in the United States, especially in Rust Belt states. Contextualized analysis, where the real incomes have been falling and long-term structural employment has been going up. Build the chain of reasoning. If there are more people employed in the US car industry, this will help to maintain living standards and also increase tax revenues for the government. This may lower the US fiscal deficit and eventually help control the size of the national debt. So I'm linking tariffs to tax revenues, employment, and the US fiscal deficit, a second sort of key aspect of the question. But then we have to evaluate. However, common evaluation phrase, living standards in the United States might be harmed by a tariff. Higher prices, for example, on Mexican avocados or Corona beer, nice contextualized evaluation there, would mean US consumers have less income to spend on something else. Economists call this a negative real income effect. Indeed, consumers might actually end up paying for the tax, and that raises a very important question. If you tax an import, who actually ends up paying for it? Perhaps it's the consumer. So you see what we're doing here? We're making a point. A tariff will help maybe prevent outflows of foreign direct investment, keep income and jobs in the United States, but actually maybe consumers will end up paying because of higher import prices. And there's all kinds of analysis diagrams you can use. You could have used a tariff diagram. Equally, you could have just gone the other way and said actually consumers prefer cheaper products if they are available. What this analysis diagram does just shows, in the absence of a tariff, the welfare effects from gains in trade in cars, in this example from Mexico. So assuming that Mexico can export cars at a cheaper price than the US price, you can talk about the net loss of producer surplus for US producers, but a bigger gain for US consumers, a net welfare gain. You could build that analysis into your answer, I'm sure. But there we go again, our third point. Import tariffs on Mexican exports will help increase investment spending in the United States, which will increase their trend economic growth rate. The USA runs a large trade deficit with Mexico. Tariffs help the US economy because they'll increase the profitability of producing in the United States. This may cause a positive accelerator effect on capital investment. Obvious examples, maybe the higher price of Mexican oil will increase investment in US shale gas, optical equipment, etc. An increase in investment causes an outward shift in aggregate demand and also aggregate supply, which will help the economy to grow. So the argument here is that an import tariff could be a catalyst for higher investment domestically within the US economy. And it's a chain of reasoning there to make the point. However, this argument ignores lessons from game theory. A tariff would invite inevitable retaliation, which would harm US exporters. And the US farm sector, for example, may not be able to grow certain foods. Classic examples of Mexico, lemons or mangoes, that Mexico exports to the States. In other words, that's hinting that the United States doesn't really even have anything close to a comparative advantage in those kind of products. A prolonged trade war could harm trend growth rather than increase it. And that, of course, is a neat way of going back to the question. The question was about harm. So try to bring it subtly into your answer. So we've built 3 points, we've analysed them, we've used a couple of diagrams, and we've evaluated 3 times. We're well on the way to getting a terrific mark on the question. But obviously we have to finish the essay off. Those people who are really confident on the analysis could go the whole distance and talk about the welfare losses of a tariff. See here, an overall loss of economic welfare. And in the exam, it's one of those things where you don't want to shade things in because of the photocopying and the online system. Make it really clear with labelling. It's one of those diagrams you have to practice quite a lot. That a tariff, 20% tariff on Mexican goods, for example, would actually cause a deadweight loss of welfare. But that will be high-level analysis. in a 25 mark question. But that's what A-level economics is all about, isn't it? Getting to a high level. Then we're looking to finish the essay off. We're looking to build the evaluation with some final reasoned comments. That does differ, by the way, from exam board to exam board. I think some boards you have to write more than others. Here's my attempt at a final reasoned comment. I'm trying to say something fresh, a little bit fresh, rather than just repeating myself. On balance, I would argue that although there may be some short-term benefits of introducing tariff, the medium and long-term consequences would be harmful to the United States. This is because I'm trying to justify I'm trying to reason my argument. This is because, nice phrase to use, a 20% tariff would be a shift away from free trade, associated with NAFTA for the last 20 years or more, showing you contextualised analysis. Most economists believe in welfare gains from countries specialising in the products in which they have a comparative advantage. With a background knowledge, the United States trades over $1.5 billion a day in goods and services. My main argument is a lovely evaluative phrase. It really highlights to the examiner that you've picked out a point you want to emphasise. My main argument is that US consumers stand to lose most from higher tariffs. Indeed, many who will suffer from the higher prices and things will be families on relatively low incomes, relatively poor families. So a 20% tariff might actually have a regressive effect on income inequality. That's to bring in some income inequality distributional consequences. Ultimately, a tariff might harm the United States more than it harms Mexico, some sort of calibrated, hopefully subtle, nuanced way to finish the essay. Also, what I'm trying to show you in this video is the use of words, the economy of style, chains of reasoning using connective phrases, keeping the waffle out of the essay. Less is more, but I think with 2 diagrams, 3 key points evaluated, and a final reasoned comment, this would be a terrific answer to this particular question. Well, I hope you found that useful. Download the slides and things, check it out again if you want to, and good luck with the revision on this really key topic.